Magandang umaga po sa ating lahat. We are pleased to welcome you all sa press conference ng Philippine Statistics Authority para sa 2025 first quarter performance of the Philippine economy ngayong ikawalo ng Mayo 2025. Ako po si Nicole Navea, ang inyong host para sa press briefing na ito. Para po sa ating guests na nais makibahagi sa talakayan, ang ating event ay naka-livestream sa PSA Facebook page at TikTok page at maging sa PSA YouTube channel, Philippine Statistics Authority at PSA.gov.ph_. Ang mga updates naman ay posted sa PSA X account gamit ang hashtag PHGDP. Kaugnay nito, upang ibahagi ang mahahalagang impormasyon o updates sa ating ekonomiya, ikinararangal ko pong ipakilala ang ating mga resource persons para sa press conference ng 2025 first quarter performance of the Philippine economy. Sila ay sina Undersecretary for Policy and Planning Group, Rosemary G. Edilion ng Department of Economy, Planning and Development or DepDev, formerly National Economic and Development Authority, at si National Statistician and Civil Registrar General, Undersecretary Claire Dennis S. Mapa ng Philippine Statistics Authority. Nais din po namin kilalanin ang presensya ng iba pang mga opisyal ng DepDev at PSA na kasama po natin ngayon both on-site and online. Mula sa DepDev, kasama po natin ngayon sina Assistant Secretary Roderick M. Planta, ASEC Agnes E. Tolentino, Director Desiree Joy Narvaez, and Director Frances Fatima Cabana. At mula po sa PSA, kasama natin ngayon ang Deputy National Statistician ng Sectoral Statistics Office, si Dr. Divina Gracia L. Del Prado. Kasama rin po natin sina OIC Assistant National Statistician for Macroeconomic Accounts Service, Mr. Mark C. Pascasio, and Assistant National Statistician for Social Sector Statistics Service, Mr. Adrian A. Cerezo, and Assistant National Statistician for Economic Sector Statistics Service, Ms. Rachel C. Laksa. Ngayon, atin pong pakinggan ang ulat ni PSA Undersecretary Claire Dennis S. Mapa.
Magandang umaga sa ating lahat. Ang Philippine Statistics Authority ay mag-uulat ng estado ng ekonomiya sa bansa sa unang quarter ng taong 2025. Ang Gross Domestic Product o GDP ng Pilipinas ay nagtala ng pagtaas na 5.4% sa unang quarter ng taong 2025. Ito ay mula sa naitalang 5.9% sa napagtaas sa parehong quarter noong nakalipas na taon. Ang Gross National Income o GNI ay nagtala ng pagtaas na 7.5% sa unang quarter ng taong 2025. Gayun din, ang Net Primary Income from the rest of the world ay tumaas ng 24.6% sa unang quarter ng taong 2025. Sa Seasonally Adjusted National Accounts, sa unang quarter ng taong 2025, ang Gross Domestic Product ay nagtala ng quarter-on-quarter na pagtaas na nasa 1.2%. Sa kabilang dako, ang GNI ay nagtala ng 1.4% quarter-on-quarter na paglago sa parehas na period. Ang mga pangunahing sektor ng ekonomiya na agriculture, forestry and fishing, industry at services ay nagsipagtala ng mga pagtaas na nasa 2.2%, 4.5% at 6.3% respectively. Sa Seasonal Adjusted GDP naman, ang industry ay nagtala ng may pinakamataas na paglago sa mga pangunahing sektor na mayroong 2.0% sa quarter-on-quarter basis. Sinundan nito ng agriculture, forestry and fishing at services na nagsipagtala ng pagtaas na 1.8% at 0.8% respectively sa quarter-on-quarter basis. Sa unang quarter ng taong 2025, ang per capita GDP ay tumaas ng 4.5%. Ito ay mula sa pagtaas na 5.0% sa parehong quarter noong nakalipas na taon. Ang per capita GNI at per capita Household Final Consumption Expenditure ay parehong nakapagtala ng pagtaas na mayroong 6.6% at 4.4% respectively. Sa naitalang pagtaas ng GDP na nasa 5.4% sa unang quarter ng taong 2025, ang services ay nagtala ng may pinakamataas na contribution na mayroong 3.9 percentage points. Ito ay sinundan ng industry na nakakapag-contribute ng 1.3 percentage points at agriculture, forestry, and fishing na nakaambag ng 0.2 percentage point. Sa 16 na sektor ng GDP, ang human health and social work activities ay nagtala ng may pinakamataas na paglago na mayroong 11.1% sa unang quarter ng taong 2025. Ito ay sinundan ng mga sumusunod: transportation and storage na tumaas ng 9.8%, other services na tumaas ng 7.6%, at education na tumaas ng 7.21%. Ang mga sektor na may malalaking contribution sa pagtaas ng GDP sa unang quarter ng 2025 ay ang mga sumusunod: wholesale and retail trade, repair of motor vehicles and motorcycles na nag-ambag ng 1.0 percentage point. Financial services and insurance activities na nag-ambag ng 0.824 percentage point at manufacturing na nag-ambag ng 0.817 percentage point. Sa demand side naman, ang volubles ay nagtala ng may pinakamataas na paglago na mayroong 20.2% sa unang quarter ng taong 2025. Ito ay sinundan ng mga sumusunod: government final consumption expenditure na tumaas ng 18.7%, imports of services na tumaas ng 12.1%, at imports of goods na tumaas ng 9.1%. Sa unang quarter ng taong 2025, ang mga sektor na may malaking kontribusyon sa pagtaas ng GDP sa expenditure side ay ang mga sumusunod: household final consumption expenditure na nag-ambag ng 3.9 percentage points, government final consumption expenditure na nag-ambag ng 2.6 percentage points, at construction na nag-ambag ng 0.9 percentage point. Ang Philippine Statistics Authority malugod na nagpapasalamat sa inyong pagdalo sa National Accounts Press Conference para sa unang quarter ng taong 2025. Salamat at magandang umaga sa ating lahat.
Ngayon atin naman pong pakinggan si DepDev Undersecretary Rosemary G. Edelion para sa pahayag niya ukol sa 2025 first quarter performance of the Philippine economy sa ngalan ni DepDev Secretary Arsenio M. Balisacan.
Friends from the media, fellow Filipinos, our colleagues from the Philippine Statistics Authority and the newly established Department of Economy, Planning and Development. Good morning and thank you for joining us. So please allow me to deliver this statement on behalf of Secretary Balisacan, who is currently with the Philippine delegation attending the annual meeting of the Board of Governors of the Asian Development Bank in Milan, Italy. So our concise description of this first quarter economic performance is a measured start. There are actually many layers to it, and let me help peel it apart. So, as already reported, the Philippine economy grew by 5.4% during this first quarter. It actually shows signs of a steady growth. And this is actually faster than the growth that was that we saw during the fourth quarter of 2024, which is at 5.3, although slower than the 5.9% that we saw during the same period last year. So while this pace falls short of our initial expectations, it reflects developments from the broader global context of tempered economic activity amid persistent uncertainties. So we ranked second among our Asian peers that have already released their first quarter figures, so like trailing Vietnam at 6.9, but tying it up with China, 5.4%, while outpacing Indonesia, 4.9, Malaysia, 4.4, and Thailand forecasted to grow at 2.8%. And this performance underscores the relative resilience of our economy in the face of global volatility. Looking at investment and external trade is actually a mixed picture. Fixed capital formation grew faster at 5.9% versus 5.0% during the Q4 of 2024, despite the marked deceleration that we saw in corporate construction, growing at 1.6% versus 5.5%, and the moderation in private construction, 6.4% from 9.7%. Investment in other components, including durable equipment, which grew by 8%, also increased. However, there was a significant drawdown in inventories. So there was a drawdown of 98%, which is actually coming up from a substantial buildup in Q4 of 2024. Now, the external sector's performance actually reflects business strategies that were employed in anticipation of greater uncertainty in global trade. So thus, even with the strong growth of exports at 6.2%, coming up from 3.2%, net exports contracted sharply by 19.9% from its previous performance of a minus 1.4%. The contraction was driven by the rise in goods imports, 9.1%, up from 2.4%, particularly in transport equipment, industrial machinery, and electrical machinery. Services imports also expanded by 12.1%, led by transport at 15.4% and travel at 15%. Meanwhile, domestic demand remained a key pillar of growth, expanding by 6.7%, up from 5.4% in the previous quarter. Easing food inflation supported household final consumption, which grew by 5.3% year on year, which is faster than the 4.7% growth recorded in Q4. Government expenditure growth surged actually by to 18.7% from 9%, and this one reflects the front loading of public programs in anticipation also of the election ban. On the production side, agriculture encouragingly grew by 2.2%, industry held steady at 4.5%, and services posted a robust growth of 6.3%. Now, these figures reflect a stable, albeit cautious, expansion across the sectors. So, what are the strategic imperatives for sustained growth? We should note that amid the ongoing trade war, multilateral institutions such as the International Monetary Fund and the World Bank constantly project the country to remain one of the fastest growing economies in the region this year. However, this is no reason for complacency. On the contrary, the first quarter's performance reinforces the urgency of strategic policymaking, accelerated structural reforms toward economic diversification, and efficient and effective delivery of programs and projects as we near the midterm of the Marcos administration. Managing inflation remains a top priority, and we must ensure that consumer prices remain stable. The April inflation rate of 1.4% indicates that our interventions are working. For one, the Department of Agriculture is expediting the rollout of the vaccine for the African swine fever in order to stabilize pork supply and prevent price spikes. Keeping inflation low through strategic and well-designed supply-side interventions protects our consumers' purchasing power and provides us ample space for a more accommodative monetary policy that can accelerate growth in consumption and investment in the medium term. To spur investment growth, we must continue undeterred and stay the course to keep the reform momentum. Even as we continue attracting investors, facilitating investments, and ramping up critical investments in infrastructure, we must hasten the passage of key economic reforms that will strengthen the governance of critical industries like water, electricity, and telecommunications. open up the market to greater private sector participation, demonstrate the government's commitment to solve bottlenecks to infrastructure development, and build confidence in the country as a strategic and reliable partner in these uncertain times. Amid the global realignment of trade and investments, the government must accelerate its efforts to expand trade partnerships with key economies such as the European Union, United Arab Emirates, United States, and other potential markets. Such engagements will allow us to diversify our export markets, secure broader market access, ensure our businesses, particularly our micro, small, and medium enterprises, to become part of the global value chains and ensure food availability and security. On the supply side, we can and must support and capitalize on higher value-added activities in the services sector, a sector in which we have found comparative advantage, especially as digital technologies, including artificial intelligence, gain greater momentum for adoption and industries undergo workforce expansion periods, transition periods. Put differently, we must double down on our efforts to upskill, reskill, and most importantly, invest in the fundamentals of human capital development, which are health and education. And this is the only way that we can become and remain competitive in a digitally connected world. The Trabaho para sa Bayan plan, released this week, outlines the country's 10-year strategic master plan for job creation, labor market transformation, and inclusive workforce development. Tourism, under services, for example, holds much untapped potential. Strengthening international and interregional linkages, improving mobility through infrastructure development, and enhancing internet connectivity can stimulate local investment, adopt labor augmenting technology, and generate significant economic dividends. Incentivizing lower rates for hotels, accommodation, and transport during off-peak seasons to encourage domestic travel may be considered. We are also looking to enhance our capacity to conduct convergence budgeting by considering the spatial dimension to ensure continued and coordinated investments that can maximize the impact of our regional economic strategies. On the fiscal front, efficient public spending is critical. Catch-up plans for delayed programs must be prioritized post-election, and capacity building for the newly elected officials should be expanded to ensure effective public service delivery. The economic team has to strengthen the linkages between planning, resource programming, and budgeting. And furthermore, through stronger monitoring and evaluation, we are enhancing our efforts to close the loop to ensure that we direct our scarce resources toward the most impactful and responsive programs and projects. With the Philippines emerging as one of the fastest growing middle-income economies, we remain optimistic about sustaining and accelerating our progress. And this optimism is not passive nor misplaced. It is matched by a commitment to swifter, more decisive, and dynamic action. The Marcos administration is working hard to facilitate targeted and strategic investments, enable innovation, proactively monitor risks, deploy targeted social assistance, and preserve our sound macroeconomic fundamentals. Our long-term goal has always been to achieve resilient, sustained, and inclusive economic growth and development. And this means going beyond GDP growth. It demands coordinated and well-targeted investments in human capital, stronger social protection systems, and more responsive governance. It also calls for institutions that are not only efficient, but also equitable and future-ready. As we look to the rest of the year, we are presented with a vital opportunity to translate plans into outcomes that our people feel. This period calls for sustained focus, strategic execution, and collective resolve. We must seize every opportunity to implement reforms, accelerate key programs, and deliver tangible results to meet this year's targets and progressively realize wins and results toward long-term national progress. Our commitment remains steadfast. We move forward with purpose and determination, confident in our leaders' commitment, the strength of the economy, the resilience of our people, and the clarity of our national vision. And we look forward to the rest of the year with optimism and hope for better developments. Thank you and good day to all.
Maraming salamat po, Undersecretary Edelion. Dumako na po tayo sa ating open forum. Bago natin ito simulan, nais po naming pasalamatan ang lahat ng ating mga media partners na kasama sa press briefing na ito. Para po sa maayos na pagsagawa ng ating open forum ay narito ang ilang mga paalaala. Para sa mga online participants, maaari po ninyong gamitin ang raise hand feature ng Zoom kung nais niyo pong direktang magtanong sa ating mga resource persons. Kapag kayo po ay natawag upang magtanong, pakibanggit po muna ang inyong pangalan at ang organisasyong inyong kinabibilangan bago po sabihin ang inyong tanong. Maaari rin po kayong magpadala ng katanungan gamit ang chat box. Siguraduhin lamang po na nakalagay ang inyong pangalan at ang organisasyong inyong kinabibilangan. Panatilihin pong nakamute ang inyong mga mic kung kayo po ay hindi pa natatawag upang magtanong. Para po sa ating mga on-site participants, pakitaas po ang inyong kamay kung kayo ay may katanungan at hintayin lamang po na kayo ay ma-acknowledge upang magtanong. Kapag kayo ay natawag upang magtanong, pakibanggit po ang inyong pangalan at ang organisasyong inyong kinabibilangan bago banggitin ang inyong tanong. Para sa mga kopya ng press kit, ipapadala po namin ito sa ating online media participants via email pagkatapos po ninyong sagutan ang evaluation form na ipapadala via email at Viber group chat. Ang printout ng ating press kit ay ibibigay po ng aming staff sa mga on-site media participants pagkatapos sagutan ang printed evaluation form. Ngayon ay handa na po tayo sa ating open forum. The first question for this press conference is an advanced question sent by Sir Ted Cordero of GMA News. How much is the value in peso terms of the PH GDP in Q1 of 2024 versus Q1 of 2025?
Okay, thank you, Ted. Yung ating GDP ngayong Q1 2025 in current value ay nasa estimate 6.587 trillion. On the other hand, nung 2024 Q1, yung current value ito ay nasa 6.119 trillion. No? So may dagdag tayo dyan na mga 467.6 billion. That is the 7.6% increase sa Q1 2025 versus Q1 2024. Doon naman sa constant prices, ang estimate natin na GDP for Q1 ay nasa 5.477 trillion for 2025 versus Q1 2024 na nasa 5.196 trillion. May dagdag siya ng mga 281 billion and that is the 5.4% increase year-on-year that was reported earlier. Thank you.
Thank you, Yusek Mapa. May we know if you have questions from our on-site participants? Yes, Sir Jerome Morales of Bloomberg.
Hi, good morning, NS and USEC. Thank you for the presentation. At least in the first quarter, we were below our target for the full year. So how confident, is there any confidence, optimism from the government that for the full year, we will be able to meet at least the lower end of our target for this year? And what gives us such confidence? Thank you.
Hello? Yeah, okay. Yes, thank you for the question. Actually, we will be, the DBCC will be meeting, first the technical board will be meeting next week to go over this first quarter numbers, but also to look at our assumptions for the rest of the year. So as you know, actually at the beginning of the year, January pa lang, we already saw a lot of uncertainty. But this first quarter is actually not really not quite a disappointment because, like I said, there's really many layers to it, and a lot of it is born out of the uncertainty. We saw that businesses have also anticipated have also employed strategies in anticipation of more uncertainty. But there are things that that also provide us optimism. For instance, the investments in durable equipment, which also makes up a huge bulk of the imports, are really on capital equipment. So like transport equipment, electrical equipment. So these are things that probably will no longer be needed for the rest of the year. So we will have to go back and see which ones of these are really just one-off increases in imports and which ones will be actually needed for future growth. And so, begging your indulgence because we do not yet have the figures, but we will be reporting, of course, as we are able to refine our forecast. Thank you.
Thank you, Yusek Adelion. Another question from our on-site participant. Yes, Ms. Luella Desiderio of Philippine Star.
Good morning. I just want to ask, since the current growth target still stands at 6 to 8%, by how much should the economy grow in the remaining quarters for us to meet at least the low end of the target? And since you mentioned that you will be going over the first quarter performance and the targets that you have, based on your recommendation for DepDev at least, do you think it's time to let go of the 6 to 8% target, or should we be holding on to it and just making slight adjustments? Because even Secretary Balisacan mentioned earlier that 8% may be difficult to achieve this year. Thanks.
Yes, thank you. So for the rest of the year, we need to grow by 6.2% in order to achieve the lower end of the, or in order to grow by 6% for the whole year of 2025. And of course, we know that in terms of previous experiences, this is actually within the range of possibilities. But whether or not this is still achievable on the basis of what we think would likely happen for the rest of the year is something that we will have to discuss with our counterparts, with our colleagues in the DBCC. Of course, we remain optimistic because as the numbers has shown us, there are actually signs that the economy is still very resilient, like domestic demand is still strong. But of course, the global demand is not really, well, it's in a period of volatility. And how we place in this period of volatility is, again, something that we will also need to discuss with our economic team that went to the US for further negotiations. Thank you.
Thank you very much. We have a question from Zoom from Ms. Eileen Menchas of Abante. May we have the comparative growth in household spending in the first quarter of 2024 and fourth quarter of 2024 for Yusek Mapa?
Thank you, Eileen. Yung ating household final consumption expenditure for the first quarter, as reported, it grew by 5.3%. Yung ating quarter 4 naman ng 2024 ay nasa 4.74%, no? So siguro buuin ko na lang yung 2024 quarters. First quarter ng 2024, household final consumption expenditure ay nasa 4.7%. Tapos ito ay tumaas sa 4.8% sa quarter 2. Tumaas din sa 5.2% sa quarter 3 ng 2024 at bumaba slightly sa 4.74 ng quarter 4 at tumaas naman ngayon 5.3 nitong quarter 1 ng 2025. Thank you.
Thank you, Yusek Mapa. Another question from our on-site participants. Let's go first with Sir Mikael Flores of Reuters and then Ms. Titas. Thank you.
Yusek, good morning. We've seen government spending grow by 18.7% in the previous quarter, and as you mentioned, that's largely due to front loading. No? So for this quarter, we expect the effect of the election spending ban to take effect. So are we expecting a marked slowdown for this quarter, and where will we find the other drivers to growth for the second quarter, given that we're expecting less of a contribution from government final consumption expenditures.
Yes, thank you. Actually, for the entire year of 2025, there will still be substantial growth from government final consumption expenditure. Again, just looking at the disbursement program for the year. But yes, quarter and quarter, probably for Q2, although there will be a slight reduction in terms of programs that have the new programs, because these are the ones covered by the election ban. But for the usual programs, they will still be continuing. On the other hand, we expect that there will be increased spending for, let's say, advertising, for the publishing sector, for the paper and paper production sector, related also to the election spending.
Thank you. Now, a question from Ms. Nitas Lopez of Bloomberg.
Good morning, Yusek. We've seen the peso gain much ground over the past week, hitting 55 to a dollar. Do you see the peso's appreciation as a boon or bane to the Philippine economy, given the ongoing trade war and other external developments? Thank you.
Yes, thank you. Thank you for the question. It's kind of tricky because for the year, of course, this was our projection. I think our assumption last December. The 55 value level is actually a bit below our target range, but this is also, an average for the year. So is it a boon or a bane? In terms of revenues from, from the importation, then that will be a bane for our tax revenues coming from imports. But we will also gain in terms of having much cheaper fuel, yung gas natin, and probably because a lot of this also yung mga diesel powered power generation natin, then that will also be a plus for us. But on the whole, we usually do not want an overvalued currency, because this will adversely affect our tradable sectors or our export sector. And so we leave it up to our monetary authority to to kind of not really intervene, but address this volatility. We still think that it's a one-off development, and a lot of it is due to the I think the recent announcement of the GDP for U.S. GDP performance the previous quarter.
Thank you very much. We have a question from Sir Dirk Corozal of Manila Bulletin, but I think this is also the same question that was answered by Yusek Adelion earlier. Now we proceed to another online question from Mr. Ian Sigaral of Inquirer. Was there a significant drag from the next exports component or net exports component in Q1? If yes, how did the U.S. trade war contribute to this?
Yes, actually, net exports dropped by 19.8%. But the thing is, if you look only at exports of goods and services, this was really very strong. So exports of goods and services grew by 6.2%. So we're seeing that it's not really the trade war per se, but it's really because of the, like I said, the anticipation of uncertainty in global trade, and therefore a lot more imports where import expending were front-loaded during the first quarter, and as we mentioned, it has mostly to do with equipment, capital spending, actually, capital imports, and so not the trade war per se, but in anticipation, I suppose. Yeah.
Thank you, Yusek Adelion. Do we have other questions from our on-site participants? Yes, Ms. Aubrey Inocente of Business World.
Good morning po. I have a question po on consumption, more on of an outlook po. Um, since government final consumption expenditure ay tumaas, so from front-loading of from the election, in the following quarters po ba, do we expect a lower or slower growth dahil tapos na po yung election? Same din po dun sa private consumption since tapos na rin po yung sa election. And paano po, paano yung factor nung sa weather natin ngayon? Thank you.
Yeah. If you're talking about government final consumption expenditure, then yes, we will be seeing possibly a moderation. Kasi as you know, government spending is not really limitless. We are limited by how much is really budgeted for the year or appropriated for the year, plus the continuing appropriation. And so, but for the entire year, on average, it will still contribute positively to the GDP. With respect to household consumption, household final consumption expenditure, so what affects it really is of course, the interest rates and then the inflation rate. And since we have been seeing easing inflation, and so we are hopeful that this will continue, and therefore it will impact positively on the household final consumption.
Thank you, Yusek Adelion. We have another question from Ms. Eileen Menches of Abante, sent via Zoom. So there's a realignment in global trade because of the Trump tariffs that threaten exports, including service exports that the WTO already flagged. There is also a decline in building permits issued that would suggest lower growth in construction going forward. Even government jobs are down. How would this affect household spending, and how would this impact growth? With the limited fiscal space and spending on just debt servicing already amounting to 342 billion in the first quarter, what would drive growth this year and in 2026? This is from Ms. Eileen Menches of Abante.
Okay, thank you. Thank you very much. Now, with respect to the, I was not able to note every question, but anyway, with respect to the building permits, yes, there was a notable reduction or slowdown in the issuance of the business permit, and this one really has to do with the currently a period of oversupply, but we would call it some period of adjustment in the real estate sector. So as you know, previously there was really this I think accelerated investment, or there was a boom in the real estate sector, but then we had some policy adjustments, major policy reform, since we banned the pogos, and so there was an exodus, and therefore we have a period now of an oversupply. But we're seeing that there will still be that adjustment, especially as we mentioned before, even with respect to work arrangement, there has to be a reconfiguration of office spaces towards more of the co-working spaces. How do you call that? Collaborative working spaces. I think that has to be done, and if that pushes through, and we think that in any case our private sector is very agile in redesigning the configuration of these office spaces, then that will still be okay. Now, what are the other questions?
She was asking what would drive growth this year and in 2026, given the limited fiscal space and spending on just debt servicing already amounting to 342 billion in the first quarter.
Yes. Firstly, there was also the question on the the trade realignment. Yeah. I think we mentioned also that we are re-engaging, or actually engaging with our counterparts, with the European Union, also countries in Europe, in the United Arab Emirates, of course the U.S. the U.S. and also our other free trade partners. And we think that the key really to this uh, to this new global realignment is, diversification. So we need more partners. So we need, and that's actually, I think, regardless of the global realignment, that is still the way to go. Now, in terms of what would drive the growth this year and then the next year, we are really very confident about growth in. Still, there's the growth in public construction and also the PPPs. So as you know, we still have a very healthy pipeline, and there's a lot that's going on in the construction industry. So and then there's also the growth in tourism. As we by next year we will be hosting the ASEAN, and so as you know, when you are the host of this ASEAN, it's actually an opportunity for us to showcase our tourism spots, and of course we will already be having guests as a matter of course because of the ASEAN. And related to that, there is a lot of I think preparations already being undertaken this year, also with respect to infrastructure, in preparation for that ASEAN hosting. So we still hope to have very robust IT BPM growth, and also the growth in our export industries like the semiconductors. We are actually looking at several investment leads ang tawag ng DTI in the semiconductor. And since we already have a substantial sector on the semicon and electronics, then we think that being able to expand it is also a good strategy.
Thank you very much, Yusek. Now for the probably last on-site question from Sir Mikhail Flores of Reuters again.
I'll just hit two questions with one. First, on household financial consumption expenditure. Now, we've seen household spending hover between 4.7% and 5.3% over the last several quarters since in Q2 2023. No? I was wondering if this is the kind of level that we will see going forward despite easing inflation, or do we expect a pickup in the coming quarters with inflation going down? And on gross capital formation, we're seeing a second straight quarter of slowdown in terms of capital formation growth. Do we expect this kind of tepid investment growth given the economic uncertainty that you've already mentioned? So businesses would probably put off putting long-term investments until there's more clarity in terms of policy going forward.
Yes, thank you. With respect to household final consumption expenditure, yes, you're right that it's kind of moderated but we're happy with this 5.8%, 5.3, sorry, 5.3%. So this is faster than the 4.7% growth in Q1 of 2024. And we see that in terms of the sectors or the spending that grew, there was growth observed in the spending for food and non-alcoholic beverages, 4.5% versus only a 1.5% last year. And then restaurants and hotels also increased 6% from a 5.6%. We're also actually very interested in the household spending on, let's say, private spending on education, which grew by 7.2% from 6.1%. Tapos yung mga communication, again, this is actually 6.4% from a 3.8%. Recreation and culture, which is also tells us that we are, we are having this, we're able to spend more on recreation and culture. 9.7% versus 9.1%. And therefore, we will be seeing, yes, a moderation in that spending in total because our population growth is also moderating. So, but on a per capita and with respect to the items where we spend it, it actually shows also an increasing income level, and and we're happy also that there was an increased spending on food and especially spending on restaurants, which tells us that this is also an impact of the easing inflation. Now, with respect to investments, actually on capital formation, the reason for that slower growth is because of the substantial drawdown in investments. So if you look only at the fixed capital formation grew by, I don't have the numbers, 5.9%. Yeah, 5.9%. And yeah, versus Q1 of, yeah, if I can have that number, please. Fixed capital, 2.3% only last year. And then, actually, this is also, this is, that's why we say it's a measured start. It's really very cautious, but still you see the optimism being demonstrated by business and also by households. So there was more investments in durable equipment. And this one tells us that okay, they are waiting, they're kind of anxious probably that prices might increase or there might be some problems with the supply chain going forward, and therefore they already did the investments or the spending during Q1. But that tells me that they also have positive business prospects going forward. Probably not to do with the external sector, but to do with the domestic demand. Because as you know, domestic demand is very strong. And so why would you invest in capital equipment now if you know that you cannot actually continue with your business going forward? So it's not rational. And we think that the reason why they spent on the capital equipment now is so that take advantage of the lower prices. And we still have the supply chains functioning efficiently, so you would rather front load it. But that is really in anticipation that you can continue your business going forward.
Just some sort of a follow-up, no? So based on, as you mentioned, we expect a moderation of consumption growth, no? Investment will be quite tepid also. Are we not at, is this not parang early telltale signs that we're falling into some sort of a middle income trap where investment growth is not fast enough for us to have a higher, income levels, and the consumption growth is stagnant at a certain level that we're seeing now?
The middle income trap is actually, well, it's been there, and our challenge is really to get out of this middle income trap. And to be able to get out of this middle income trap very well, hopefully very quickly, it's really about being able to diversify our economy. So it has to do with economic diversification, has to do with more innovation, has to do with technology adoption. With technology adoption, then you can have greater labor productivity. And this is actually what is needed so that we can grow faster and escape that middle income trap. With the moderation of household final consumption, because again, if you're already at the stage in your life where, well, you kind of have most of everything that you need, and therefore it's just some bonus na lang yun. So the rest of your income will probably go into more investments, and that is actually what we need. More investments, but especially those that adapt modern technology, but labor augmenting technology. So ito yung, again, it's a balancing. We still want inclusive growth, of course, inclusive development, but at the same time, we know that we need to grow very, very fast so that we can this development this growth and development could be, we could reach that even our social targets, social development targets very quickly.
Ma'am, if I may, no, because when I started covering NED or NEDA and DepDev now a decade ago, we've been talking about economic diversification to ramp up growth, and we're still talking about it now. So why do you think we're not diversifying fast enough? So what needs to be done to fast track the economic diversification that we aspire for?
Yeah. And as Dennis was telling me, COVID, COVID. No. So we had, we really had that hiccup, no? So that was really 2 years, more than 2 years actually. Yes. If you would notice that, I think starting 2011 or 2012, so we have been growing consistently, meaning positive lahat yan. Yeah, every quarter we actually demonstrate positive, except during the time of COVID. So nagkaroon tayo ng one-off na baba, that was in Q2 of 2020, but since then pataas ulit ng pataas. But of course, it was a deep contraction, and we have been recovering, trying to recover. So why haven't we achieved this economic diversification that we want? Well, actually, it's really to do with the innovation part of it and the technology adoption. So, and this is why I'm sorry? Yeah, so this is why we are putting emphasis on the promotion of innovation and then the technology adoption. But apart from that, we still really need more reforms. The COVID actually gave us the impetus really in order to undertake critical reforms like the amendments to the Public Service Act, Foreign Investment Act, the Retail Trade Liberalization Act, and we are actually already reaping some of the benefits of this PSA. But a lot more needs to be done because the reform is still not complete. We need, as we mentioned, critical reforms for the governance of of some industries, like on water, like on telecoms as well, and on electricity. So we have not yet completed the reform, and because many of this, for instance, the Public Service Act that was amended, that was a 1930s policy. There was a 1930s legislation, so it took a long time. And so we need to revisit all these constraints to our economic diversification and laying down that reform to be the foundation for that economic diversification.
All right, thank you very much, Yusek Adilion. Unfortunately, we only have time for one more question from our FB Live. Sir Christopher Tabafunda San Pedro for Yusek Rose. Do you think 100 BPS or basis points rate cut as projected by the BSP for 2025 help boost the GDP figures to at least achieve the lower end of the target? So that's from our Facebook Live.
I wish. Anyway, for 2025, 100 BPS, there's really, we think there's really room for more easing. So that is actually a welcome development, if ever, because again, in this space of increased global uncertainty, and if we can have deep capital markets, that's the first one. And if we can have a lower cost of financing, lower cost of investments by this positive policy action, then that can really boost investments. So it will be really very positive for growth. Now, whether or not it will reach the lower end of the target, like I said, we will meet next week, and because there are really a lot of factors that we need to consider. Of course, we're very, very optimistic here, but we also know that our monetary authorities are looking also at all these factors, And we also want the case where we can have that ammunition in case there will be more uncertainties happening in the global market.
Thank you, Yusek Adelion. So that wraps up our Q&A for this round of JDP. So for those questions that are not accommodated, please just approach the Secretariat so that our resource persons can answer your questions via email. So dito na po nagtatapos ang ating open forum. Nais po naming pasalamatan ating mga resource persons, DepDev Undersecretary Rosemary G. Adelion at PSA Undersecretary Claire Dennis S. Mapa. Maraming salamat din po sa iba pang mga opisyal ng DepDev at PSA na kasama natin ngayon. Gayon din po sa ating mga media partners na nakilahok sa press conference na ito ng Philippine Statistics Authority para sa 2025 first quarter performance of the Philippine economy. Sana po ay patuloy niyo po kaming suportahan. Maaari niyo pong bisitahin ang PSA website via www.psa.gov.ph for additional updates. Muli ako po si Nicole Navea mula sa PSA. Magandang umaga po sa ating lahat.